Hello, traders, and welcome to this week's analysis update on gold XAUUSD. My name is Vic. Thanks for joining me here. So, gold completed this W pattern on weekly time frame. If you have not seen my previous analysis, please do that because this is more of an update on the previous analysis. So, last week analysis is very, very important. So, this completed a W pattern on weekly time frame, and it started to fall down. It reached a first profit target. It also, you can also think of it as reaching the midpoint of that W pattern, which is usually the first target of completion of W pattern. Now when it reached here last week, we were expecting market to go up because this can act as a very good support area. Okay, and that is why we were looking for a bullish movement on gold here. In spite of that, we also have a few other things, such as the market has been already bullish, so when it falls down it tries to go back to the same momentum. So it works like this: previous impulse, then we have a correction, and market usually tries to find a support or some reason to resume the previous momentum, right, this momentum. So that is also one of the reasons why we were looking for a bullish momentum into the gold. So what is next now? Before we go there, let me show you what was the W pattern here. So we did this on Jan 13th, and since then it has been following the analysis. Now the market is right here at the moment, right here, and which means that it can potentially still go further up to retest this previous area, because there was a lot of momentum going on, and there were a lot of sell orders here. So market can actually go all the way to this level here, which is near about 1980 something level, 1982, 1985 level. In fact, it reach all the way to 2000 level as well, and then fall back down. And this is going to create a kind of M pattern as well. Now this M pattern is also can be completed where it is right now. So there are a few conditions to it, and it depends on where the market finds its next resistance, and which we'll talk about in a second. So this is how it is looking on higher time frame. Let's go and look at the lower time frame. So if I come here and look at the daily time frame. Now on daily time frame, as I mentioned before in my previous analysis, that we have this potential head and shoulders pattern forming. Now it may or may not work out, because you see the problem with the head and shoulders pattern is that it is not quantifiable. You cannot put numbers against it. The only thing is there are few factors which you can look at. One is that this previous resistance, so the market can reach this level. And other thing is the neckline. So unless it is broken to unless the neckline is broken, you cannot say that the market wants to go down. But you should just focus on few things, that this is potentially a good area, similar area where this market can go to. So that's one of the things. Another area is, if I go to the smaller time frame such as 4 hour, you will notice that we have completed, actually not completed yet, but we have been forming a W pattern. So we have a W pattern like this here, and what market has done, it fell down to retest the previous structure here. So basically this W pattern is kind of a done already. So what, and the market has started to provide us with a support here at the midpoint of this W pattern, which means that it can potentially go back up to a next level here, or it can go even higher than the initial starting point of the W pattern, which is going to be somewhere around here. So this is the reason why we are looking for still bullish movement. But for that to happen, it has to break through this previous structure area. Okay, so we'll see all these levels, but just think just try to understand where the market could be going based on the structure. So if it breaks through this previous structure, then we are looking for this area as potential target. If that is broken, then we are looking for this potential target, because that will be the next level here where this whole entire move started. And if that is broken, then we are looking for an extended W pattern. Okay, so that is why we have these areas mapped up. Okay, now this one, when it is moving, when it is moving to this level here, we have intermediate level, which is coming from head and shoulders level, right? So somewhere around here. So these levels are available to us, and that is why we should be potentially looking at them. So now if I remove all of this, in our channel, I mentioned this, like, this was a M pattern and the market came into this FCP zone, and this is why it could go up. And that's exactly how it worked out last week. So if you enjoyed this analysis, like, and if you made some money, like, just hit the like button and share it with other traders and trading communities as well. Now, what market has started to go up, all of these blue lines, blue horizontal lines, I'll post the chart below this video, are actually gaps, and this market never leaves any kinds of gaps open. So at some point in time, the market is expected to reach and close those gaps. Now, having said that, there are a few things, as I mentioned before. So this is the previous structure level, like, this is the head and shoulders, like, left shoulder level. So that is why I have 1974.613 here as my one of the resistance. Then we have this FCP zone. Why is there? Because first of all, there are two gaps available in this FCP zone, and it lines up very nicely with this Fibonacci level here, and it also completes that W pattern. Remember, we were just talking about, right, the W pattern which completes here. So this is why we have this FCP zone. Now, if and I will tell you, like, how to treat that now. So if that is also gone, then we are looking at 2000 level, that FCP zone. And if that is gone, then we are looking for near about 2022 2024 level here as the next target here. Okay, so this is all the bullish move upwards move. Okay, now we always must have a plan for bearish movement as well, because if the market starts to go down, right, even though our bias is bullish, if it starts to go down, then we should not feel lost. We can still make money on this, right? For that, you need to have a plan on the bear side as well. So as we can see right now, is that this is the midpoint of that W pattern which I talked about, and the market tested that and it actually started to go higher, and that is one of the reasons why we are still bullish. But before it starts to go towards 1974, it needs to break through this level. Okay, and if 1974 is broken, then we are looking for this FCP zone as the next target of resistance area. And if that is broken, then obviously, like, the next one. Okay, so on the bearish side of things, if this level is broken, okay, 1950.439, if this is broken, actually, now because this candle actually pierced through this, this becomes like the new kind of, like, support area. So if the market goes through both of them, then what you're looking for is somewhere around this area, 1930 level or so. Actually, let me put Fibonacci on it so that I know exactly, approximately, like, where it is expected to go. So yeah, so this is exactly where it is, so near about 1930 area or so. So this is where it can fall to. Okay, now for the condition is, if it breaks through 1950.439 and it breaks through 1943.490, then it is going to come down to 1930 area or so. And if that is also broken, then we are looking for next level as 1920. Okay, and if that is broken, then we are looking for approximately 1909, because there is a gap available, right? One of these gaps was filled here, now this is still open. And if that is broken, then we are looking for 1888 level. Actually, before that, we were looking for 1895 and then 1888. So these are the levels that we are looking at. But as soon as it reaches near about 1920 or 1909, we will require a little bit of reanalysis, right? So one of the things that I wish should also warn you about is, this week, the coming week is going to be very, very important, because we already have this war situation going on, but we have financial year end, we have month end, and then um, we have quarter end as well. So you have to be extra careful, right? There can be huge volatility and there can be huge fake breakouts. So it doesn't matter what kind of analysis you have done, you can always get it wrong if the market starts to, like, move abruptly in one direction or other direction. So trade what you see, and if you're not feeling comfortable, then do not trade at all, because you do not have to trade every day, each candle and each market. If gold is not working out for you, then trade something else. If it is not working out for you today, then trade tomorrow. If it is not working out for you this week, then trade next week. Right. So, hope you enjoyed this analysis and found this useful. If you did, please make sure that you hit the like button, subscribe to the channel, and share it with other traders and trading communities. And I'll see you in the next one. Have a great trading week.